What's going on, S-corp owners? How are you? It's Teddy G here. After a long day of work, talking to clients and trying to make sense of this mess with the new SBA PPP loan program that started February 24th. And unfortunately, us S-corp owners are pretty much screwed. I guess we can't get as much money as we would like as others are getting. Apparently, they're changing the rules up so that Schedule C and sole proprietors and people like that, sole props, are going to be able to get loans, PPP loans, based on 100% of their gross receipts. Or I should say their gross receipts divided by 12 times 2.5 times. So where does that leave us? It leaves us kind of where we were before, which is just based on our lower than normal wages, I guess, as S-corps. So what can we do about this? And I know because I'm an S-corp and my business dropped significantly, although I'm sort of climbing back out of it, dusting myself off, I guess. So I'm strategizing for myself, and I'm going to be providing this kind of guidance to my S-corps. Normally, we do S-corp tax planning at the end of the year. So we kind of do tax estimates around November, December. We figure out what their bonus pay is going to be, and then we create a net zero paycheck and paying all the taxes at the end of the year. Now I'm going to reverse all that. And because I want to take advantage of these ERTC credits for Q1 and Q2, if you qualify, if you're eligible, if your income is not more than 80% of the prior quarter, or to 2019, I should say. If you weren't established in 2019, you could use 2020 as your benchmark year over year. So let's go through some of this information. I'm going to give you a strategy here for all of you S-corps, single shareholder S-corps. I'm going to give you a pretty cool strategy that I'm going to be doing. And if I can get this thing to work, hold on one second. So here's what we got. The 7,200. So the 7,200 has to be filed or faxed in every month after the, so basically what is it? It's faxed in the following month after the close of the prior month. Okay, that doesn't sound right, but that's the way it is. So for January, we're going to fax in the 7,200 by the end of February. If that makes sense. That makes more sense. Sorry, starting to lose it a little bit now. So let's take a look at this. So now, again, like I said before, if you're on a base pay and things like that, that's fine. This example is going to be if you have zero payroll and you always wait to do your payroll towards the end of the year. What can you do now? And obviously, you could adjust this if you're getting paid. There's many ways to adjust this calculation, but I'm going to do a really simple example. I want to max out the 10 grand. So I'm going to do 10 grand, and I don't want to pay anything in. I want to just leave my federal withholding at zero, and I'm going to pay in the Medicare and the Social Security, and I'm going to get a claim. I'm going to get money back. You could adjust your federal income tax withholding in this example and not get money back at all. Just apply it to your W-2 or your payroll. But in this case, I'm going to keep it simple, and I'm going to request some cash. So how do I do that? So I have 10,000 of wages. I know that my credit for Q1 is going to be, up to 70%, right, of the eligible wages. So that gives me $7,000, okay, of employee retention credit. Now, on that 10,000, we have 15.3% for Social Security and Medicare, right? So what this is saying is, what amount have you? So if I was a monthly federal depositor and I used EFTPS and I had no other withholding and I'm just doing Social Security, Medicare, I would go to EFTPS by February 15th, which, if I would have done it, and I would have submitted the tax payment of $1,530. In this case, I didn't, because I knew I was going to do this. So I'm saying, what we're saying here in part 2, line 5 is, What amount would you have already reduced your federal employment taxes for these credits for the quarter? 1530. So the advance that I'm requesting is going to be the difference between the credit amount of 7,000 and the 1530, leaving 5470. And that's the amount that the IRS should send me a check for in the mail. So let's just look at a quick recap of that. And this is just my own little spreadsheet where, just double check. Only request in advance on money already paid or reduced by amount you didn't pay in, but that you'll owe. So hopefully that makes some sense. Now, if I had a payroll service and I was, I had all this withholding already withheld, I could request up to at least the amount of my withholding and FICA Medicare, not more than that, because you may not have covered that full 70%. So you have to be careful there. There's some calculating that needs to be done. So you don't want to request more money than what you would have owed to begin with. Otherwise, you'll have to pay it back. So that's an important point. Now, what is it? Let's say this is it for, I'm not going to do any more. I already capped out. I know what my 941 is going to look like. So this is what my 941 is going to look like because I already reached the max. So for Q1, this is my 941. I have no federal withholding. 10,000. These are the calculations. There's a 1530 that are reduced. The non-refundable part of that is 620, which we, have talked about. The non-refundable is 50% of the Social Security only. So the Social Security is 1240. Okay, you make this a little bigger maybe. So that's where that 620. So you're going to basically reduce the total credit of 7,000 by the 620. The 620 is non-refundable. The refundable then is 6380. And then, this is this form is right from the IRS. So this is their draft form, and just follow the instructions. Essentially, just follow what they're telling you, and you'll get down to, the refundable portion is here. Total deposits. Well, we didn't deposit anything, and refundable credits is 6380. Lines 13A. Okay, 13A, C, 0, and D, 6380. So we have that. This is the advance that we requested. And if we got a check already, that's fine to put it there, right? 5470. Total deposits and refundable credits less advances, subtract line 13F from 13E. Okay, that's 910. Balance 2, if line 12, 910 is more than 13G, which it's not, here's the difference. It's 0. Enter the difference. There is no difference. So the difference, 910 by 9, subtracted by 910 is 0. So that's it. So I wanted to just be clear, be very careful with the credit. And this is what a typical maxed out S-corp payroll on 10,000, which is the max, is going to look like to claim that credit and get that money at 5470 back. So, and you're going to do this again in second quarter, assuming you meet the eligibility requirements and the gross receipts test. I'm going to do the same thing for myself in the second quarter. So I'm going to be looking at what 5470 times 2 equals this times 2. 10,940. That's pretty nice. Then you could also add in some sick leave maybe, and it'll reduce down your ERC, but this could go up depending on how that's all coordinated. But I really wanted to shoot that out there because as small S corps, we don't have a lot of tax benefits with all these programs, but this is something that we have and we should take advantage of if we meet the test and our sales are down. So hopefully this helps you. Look forward to Q&As. I'll do my best to answer them. And if you need more help, just reach out to me. Don't forget to subscribe. Always forget that because I keep updating these videos. So don't fall behind because this is more or less a continuing conversation. So that's why you should subscribe. I'm not trying to necessarily blow up like some YouTube star or something like that. But again, this is a conversation. It's ongoing. So things do change and I make updates. Okay, everybody, I'm sure I'll be back soon. So still don't think I'll be getting a haircut anytime soon though. All right, I'll see ya.